Utilico Emerging Markets Trust plc is a UK-listed closed-end investment trust focused on infrastructure and utilities in emerging markets. To talk about 2024 and to look ahead to 2025, I'm delighted to be joined by co-founder and fund manager Charles Jillings. So Charles, in 2024, what were the utility megatrends that captured not just the imagination but value?
So I think if we're talking about megatrends being the growth of and use of data, and therefore, if you want investments into data centers and cable and connections, 2024 has been astounding to see the number of hyperscale 100% dedicated data centers being built to meet capacity demands from the big global users. And that trend, if you want, has played through in our portfolio. I think the other, and I've been astonished by what's being built and what the ambitions are for the next decade. I think the other astonishing megatrend is to see the continued investment in renewable energy. Notwithstanding, it is if you want, a high cost investment for most countries and needs an element of support. To see the investment that has gone in has been astonishing and really positive to see when you look at the need to address global warming. I think the third area is, social infrastructure, and governments are still pushing for the improved water quality. I know clearly in the UK we have some challenges, but certainly across the emerging markets, they still need to cover their entire population with things like raw water treatment and proper, if you want, waste processing and outcomes.
So, Charles, taking all that astonishment into consideration, which countries are setting the gold standard for adopting these trends?
I think the pleasing thing is it's across the board. I think most governments understand, in the emerging markets, most governments understand the need to invest in infrastructure and to, if you want, drive the improvements that they're seeking. So you're seeing Brazil with a very significant investment horizon, but you're seeing the same play out in the Philippines. You're seeing the same play out in Indonesia and Vietnam, all of whom are looking at huge projects to move their economies forward economically, but also to improve the outcomes, I think, for all their populations. And those, if you want, tailwinds are decades in the making and ought to continue for the decades to come. And we shouldn't forget India. Modi has a real ambition to uplift the economy, and that means improving the infrastructure.
So drilling down, therefore, which companies did you decide to add to or hold within the portfolio in 2024, and why?
So I think just trying to address the holds, I think there are a number of companies that have really good assets, that have really good management teams, have demonstrated they can perform, quite frankly, through COVID, which was a tough challenge for all of us, but a number of them performed exceptionally well through COVID and continued to deliver. So the holds have been relatively easy. Investments like FPT in Vietnam, which is, if you want, meeting the needs of corporates globally that are going into the cloud. and needing, if you want, assistance. And they have a fantastic business model. And, their earnings grew by 20%, which is bang in line with what we were expecting. They went through $1 billion on an order book for the first time. So real momentum, real progress. And their ambition is undiminished, and I'm sure they can get there. So you very easily hold those types of investments. New investments that we've been pursuing, I mean, one that sort of springs to mind is Sunny Vision, which is a listed Hong Kong data center developer. They are bringing online hyperscale capability, which is right at the cutting edge. There's a clear shortage. And that's a feature of a lot of these markets. It's one thing to say, I want to put in a data center. It's completely different. Actually finding the land, finding the power, finding the, if you want, water, because you need significant water for cooling. And, their shares are up 40%, somewhat ran ahead. So we didn't get as big a position as we might have, lower down. But, they've done fabulously this year, and I think they will continue to deliver going forward. So have to be excited about them.
So on the flip side, which companies did you reduce your positions in or let go?
So we exited a renewable energy company in Greece, and if you want, we exited into a bid, so that's a good thing because if you want realized value, Turner Energy, and did well out of the transaction. I suspect they'll go on to perform well, but that's for the new owners to achieve. We also sold down Power Grid Corp in India, which is a big transmission company, should benefit. I think we're just a bit hesitant about corporate governance and the returns that they might achieve, which would be short of what we would want looking at that market. But just picking up on Turner Energy, we invested in Piraeus Port, and we've continued to increase our investment in Piraeus Port. And Piraeus Port is benefiting from ownership by Costco out of China, and if you want the growth in the Eastern European economies, which have been particularly strong, and therefore that port is performing well.
So let's calculate all those buys, sells, and holds. How did the portfolio perform throughout the year? Was there a standout quarter, for example?
So I think two things to highlight before trying to answer the big exam question, if you want. Two things to highlight. One, currency has been a real headwind. So if you looked at somewhere like Brazil, the Brazilian real, I think, is now down nearly 25% for the year. Notwithstanding that, our Brazilian investments have performed remarkably well. And net, I suspect we're marginally up on our Brazilian investments, but that's been a real headwind. And, a number of emerging market currencies, I think, have been under pressure because interest rates have remained higher for longer. And the pushback is therefore on a weakness in the emerging market economies. I think the other thing to mention is we have an unlisted investment in the portfolio called Petalite. And while Petalite the year before did extremely well, everybody was, if you want, over eager on EV and the opportunity. The shares, unfortunately, have come back sharply, or the valuation has come back sharply this year. So the headwinds, if you want, currency and Petalite, have held us to almost a marginal gain for the year to date. If I look forward, though, I would think and anticipate that currency ought to turn the corner, because a lot has been embedded, if you want, into the exchange rates. And certainly, if I look at petrolite, it's back to the valuation of our original investment. It is raising external capital, and I'd be confident that valuation is to the upside. We'll have to quite wait and see how that plays out, though.
Understood. So the utility megatrends that you shared with me right at the beginning of our conversation, which, these megatrends, which are the structural growth drivers of these emerging economies and markets, do you anticipate that they will be much different in 2025, or is there a megatrend that is emerging in the emerging markets?
No, I think that the four that we've identified are the four that play out in our portfolio. And if I just go back to something, a company like Horizon, which is being driven by, if you want, regulatory changes brought about by the government in Brazil, who want to see improved waste treatment processes. Before, a lot of cities and corporates could, if you want, send their waste to landfills, and the landfills were suboptimal, and certainly were impacting the water and the environment. And the government rightly brought in very strong legislation back in, I think it was 2022. Horizon has been acquiring and accumulating a series of waste sites and is improving the treatment, so looking to recycle more, improving, if you want, the technology so that they can capture the energy that comes off these waste sites and then sell it back to the grid. And they are clearly benefiting from green certificates because they are absolutely improving the environment. Why do I raise that one? I think this could be decades before, if you want, they finish really acquiring and improving the environment. There are only really two companies who are aggressively looking at this space, and they are one, and they have a very small market share. So I think, a lot of the trends that are in place are going to continue for some time.
Just a couple more questions, if I may, Charles. And we can't talk about governments without politics. And geopolitics have dominated the headlines in 2024. Which diarised political events are the ones that could impact your investment making decisions in 2025? Or is your portfolio politically agnostic?
So I think if you look through the long cycle, we're owning assets which are here for 30, 40, 50 years. And certainly we look at them as if you want, correlated to political cycles. That said and done, you need institutions which are seen to be strong. We need governments that understand the need to continue to drive the investment agenda. And we certainly have that in a lot of the economies we're in. But the two that are worth talking about, one, China. And China, I think, does have a real challenge in terms of turning their consumer into being a consumer. And at the moment, if I understand all the information flowing out, they are investing in gold. And all that's telling you is that the consumer is hesitant about property, hesitant about the market, and is looking for, if you want, safety. And China has to achieve a more confident environment for them so that they can drive an internal consumer demand. I think they have the capability of doing that. I think they have the tools in the toolbox to deliver. think they're hesitant on two levels. One, they don't want another property boom, and we can all understand that. And I think they're waiting for the discussion with Trump and where does that land, and therefore how might they respond. But at the moment, I think we all have to keep our eyes on China and how they respond and keep the momentum up in their economy. And clearly, the other one is Trump. He's come in with an agenda which is pretty clear, and he is seeking to rebalance, if you want, trading relationships. I'm cautiously optimistic that he will push and he will demand, but I think he will also reach agreement. And if you looked at, past negotiations, there's usually been a win-win. It's not a one-way outcome. And I think America needs that. I think we all need that. But those would be the two obvious geopolitical things that we're paying attention to. Clearly, the wars in the Middle East and the Ukraine-Russia war are devastating to watch, and very uncomfortable. But as long as they stay contained, then they shouldn't impact on our portfolio. But we are obviously watching to see whether they do escalate, and that would be a really unfortunate. I'm with, if you want, Donald Trump, that we should be seeking resolutions to these, but it's not easy.
And are you cautiously optimistic about 2025? What are the plans for the portfolio, or will it all be determined by those currency headwinds that you've talked about?
I think a lot will be determined by, if you want, the Trump negotiation. I think a lot will be determined, therefore, by inflation in America, interest rates in America, and therefore interest rates globally, which all reference off the US dollar. Everybody, all central banks reference off ultimately the US dollar. So I think that's one set of drivers. I think the other set, as I said, is China. Having said all of that, going back to Trump 1.0, our portfolio saw increased activity. Yeah, as companies repositioned, needed to invest, if you want, in different markets and seek different outcomes, actually economic activity goes up. So I think I'm cautiously optimistic that we have the investments, we have the management teams, certainly. And I think last quarter has been strong in terms of investment performance at a business level. I think this last quarter of the year will be strong because I think people are trying to get ahead of the Trump trade. I think the first half of next year will be soft because there will be a degree of realignment. There'll be a degree of we've already traded in the last quarter this year. But by the second half next year, I'd be cautiously optimistic that interest rates in the US are coming down. Inflation has not, therefore, driven through, and the value can be outed in the emerging markets.
Charles, thank you so much for that very wholesale overview. It's been an absolute pleasure speaking to you. Charles Jillings, founder and fund manager at Utilico Emerging Markets plc. Thank you very much indeed.